Everyone is waiting for the crash. They look at the headlines. They look at interest rates and they wait for prices to drop, let's say 20%. But here is the uncomfortable truth. That drop is not coming in 2026. Miami is not crashing. Miami is stabilizing. And for the prepared investor, stabilization is more profitable than chaos. If you're sitting on cash, waiting for a crisis, you're losing equity daily. Amateurs buy on emotion. Professionals buy on market structure. Let's talk about that because today we're going to analyze the 2026 forecast and we will look at three things. First, the split between homes and condos. Second, the reality of interest rates. And third, the impact of new reserve laws. We will provide why time in the market is a failed strategy and why time in the market is the only math that works. Now, if we're going to compare the two markets, Miami is no longer one market. It is two distinct economies. On one side, you have single family homes. Inventory is extremely tight. Demand is high. Prices are projected to rise 4-5%. Why? Well, because land is limited. And migration from New York is constant. On the other side, you have the condo market. It is a different story. Inventory is sitting on a 12-month reserve. Prices are flat. They're softening. This is not a crash. This is a correction. Buyers have leverage here, but only if they understand the cost. Don't treat a condo like a single family home. The economics are completely different. Now, let's talk about yield lives in the structure, not in hope, right? Let's talk about the rate fallacy. Let's talk about debt. The era of 3%, that is gone. It was an anomaly, and it was not normal. In 2026, rates will settle between 6 and 6.3, 6.5%, and this is a healthy range. Here is the trap buyers fall into. They say that they will wait for 5%, 4%, 3%, but think about that logic. If rates drop to 5%, buyer demand will explode. Bidding wars will return and prices will jump, let's say 10% to be just conservative. You save 1% on the rate, but you pay 10% or more for the asset. That is horrible math. You marry the price, you date the rate. So you should secure your asset now and refinance when the Fed pivots. Let's talk about the regulatory shift. This is the most critical factor. Senate Bill 4D and 154. These are the new condo safety laws, and reserves can no longer be waived. This means HOA fees are rising. Special assessments are coming for the amateur, and this looks like a risk. Yes, it does. But for the strategist, this is leverage. You can definitely negotiate better prices on older units because the seller is scared of the fees, unfortunately, but you must audit the building. You must see the structural integrity study. If the numbers work, you buy the fear. If they don't, just walk away. Now, let's talk about liquidity, because liquidity without direction is 100% chaos. Control beats timing. Think about that. Let's look at the hard numbers. Single family homes are up 5 or 6%. Price growth is steady at 4%, right? Condo inventory is extremely high, but absorption is stabilizing. Migration is not stopping. Everyone wants to come to Miami. Everybody wants to live in Miami. And if we talk about the tax benefits, those are not changing. The fundamental drivers of Miami are stronger than the national average. This is why we remain bullish, not on everything, but on the right assets. You bought at the right price with the right structure. Yes, this is a win-win situation. The market rewards clarity, but it punishes hesitation. This 2026 it's not a year for gambling. It is a year for precision. So stop reading headlines. Start reading balance sheets. If you're ready to deploy capital, we are ready to build a plan. Send us a message and let's structure your next move.